Hey, what's up, everybody? It's Monday, February 22nd. I just sent out the new edition of MMT Trader. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. I'm the only one who has an applied approach to MMT. I take the concepts of MMT and I use them to invest and trade in the financial markets. I'm loving the market pullback. This is just what the doctor ordered. You know, over the last 2 weeks, bullish sentiment has risen to pretty high levels. My subscribers were apprised of this. I let them know. I show every week we go over the AAII sentiment survey and other indicators. And so the pullback is a welcome thing. It's going to flush out some of this bullish sentiment. I also like what's going on in Tesla. Tesla today dropped all the way down to 713. And some of you may recall back in January I made a video saying that Tesla stock was fairly valued or fully valued at between 725 and 750. Now, ultimately, it did go higher than that. It overshot the target. But based on, Elon Musk's own estimates of vehicle sales through 2022 and even 2023, and also based on what their expected profits are supposed to be, 725 to 750 on that stock was a fair valuation. So I'm happy to see it come down below that. There's a level at which I would buy it, but I'm not going to let you know here on this video. You got to sign up for my report, MMT Trader. Go to my website, pitbulleconomics.com, and sign up. My subscribers know, but I'm not giving out that information right here. Anyway, here's something I think is very interesting. I've been steadfast on this inflation trade based on fiscal expansion. The dollar going down. And by the way, that rally we had in the dollar over the last couple of weeks, I was selling into that rally. And now the dollar index is right back down around 90. I think it even dipped slightly below 90 today. Got to keep selling the dollar because the fundamentals are bearish. I know I did a video a couple of weeks ago saying the dollar bulls are back. And of course that was, kind of sarcastic. I mentioned that, they're rushing back in there. They rush back in to buy every single bounce in the dollar, kind of like trading like this with your fingers crossed, hoping that this is going to be the one. But as I said, policy hasn't changed. The fundamental realities for the dollar haven't changed. And the big picture overriding macro that I've been talking about, which is the, de-dollarization. And some people scoff at that. Some people laugh at that when I say it. Come on, Mike, are you serious? That's a slow moving trend, but it is unquestionably in the works. That is happening. All right. And we see evidence of that basically all over the place. I mean, Bitcoin is a very obvious manifestation of that. And I've been all over that argument. Getting back to the Tesla thing, I remember I had one guy, he was on a 30-day free trial, sent me a real smug, cocky email saying, haha, Mike, you said Tesla was fairly valued at 725 to 750. And that's when it went over 800, and he said it's going to 1,000, it's going higher than that. And it may very well, but based on the metrics that we know for the company, 725 to 750, that was a fair valuation for the stock. That was a fully valued stock at that price based on what we know about the company's vehicle sales, about its profits, about its costs. I try to do things scientifically. So who's laughing now? And at the end of the email, by the way, I'm gonna quit your 30-day free trial at the end. Let's see what happens with Tesla. Ha ha ha. So who's got the last laugh? Folks, don't do that to yourself, all right? I mean, you can have an opinion and, you know, go with it. What can I tell you? So yeah, I like what's going on right now with this market pullback. You know, here's another thing. A couple of weeks ago, and I did a video on this too, Wall Street was saying the reflation trade is over because, you know, they got the same short-termism disease that a lot of you have, that a lot of individual investors have. Like if it doesn't happen like right now, if it doesn't happen today or tomorrow, then all of a sudden, hey, it's not going to happen. I'm writing it off. It's not going to happen. So 2 weeks ago, a couple of big Wall Street banks were saying, that's it. The reflation trade is not going to happen. You know, I laughed at that. I did a video on that. I said, just wait and see. I mean, you gotta stay focused on what, you know, what the conditions are. Has policy changed? No, they haven't. Nothing has changed. I mean, just because the price, this is what I tell you guys all the time. When you're only focused on price, you keep yourself from understanding so much more information out there. Price can be very, very arbitrary. You know, I've told you that story about Benjamin Graham and Warren Buffett when he tells a story about Mr. Market coming knocking on your door. One day he's got a basket of stocks priced like this. The next day he's got the same basket of stocks priced at some other crazy amount. Same stocks, same fundamentals for those companies, just arbitrary numbers. If you only go by price, you are excluding so much important information. I don't do that. I base it on policy. I base it on basic condition. So now, guess what's happening? I'm seeing, all right, this guy, maybe you heard of this guy, Michael Burry. Michael Burry was the guy featured in the movie The Big Short. That was a movie about the 2007-2009 subprime crisis where this guy, Michael Burry, like years before the whole thing caved in, he went short the subprime market like way early, okay? And I've given my view on that whole thing. It never should have happened. It was a failure by regulators. It was a failure by the Fed to act, okay? You took a small segment of the mortgage market subprime and it blew up into a huge conflagration, and it never should have happened. So this Michael Burry guy, who for some reason every time this guy says something, it's like everybody's listening like, oh, it's Michael Burry. It's Michael Burry, The Big Short. He says the current stimulus, the stimulus that we're seeing now in the United States, is going to end up causing like a Weimar inflation. Now that is beyond laughable. That is the most ludicrous, ridiculous thing he says, because money velocity, you know what velocity is? The rate, the turnover rate of money, like how fast it gets exchanged from one person to another. So he's using this almost inapplicable quantity theory of money equation, MV equals PT. M is the money supply, P is the price, M is the money supply, V is the velocity, P is the price, and T is the total quantity of goods and services. The problem is, and a lot of these guys make the same mistake over and over, they seem to think that in this case, the quantity of goods and services in that equation, they seem to think that's a constant. It's not. It's a variable, just like the other three variables. So when the money supply goes up and when the velocity goes up, more than likely it will induce the private sector to produce more, so the quantity of goods goes up. And you don't necessarily have inflation. That was not the case in Weimar Germany. And anyone who is even a minor student of history would know this. So I've seen it now go from, hey, the reflation trade is over, to now we're going to go into Weimar hyperinflation because of a stimulus which is absolutely necessary for the economy right now. with so much spare capacity and labor. Crazy, folks. Anyway, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader.